So the annual general meeting, or the AGM, is a strata meeting that every strata scheme in New South Wales has to have each year. And the AGM must include certain motion for voting upon and consideration by the owners. The AGM can also have other motions that might come up from time to time. However, I wanted to run through with you what the motions are that need to be included each year. The first motion that must be included in the AGM agenda is a motion to confirm the minutes of the last general meeting. What that means is that the owners are voting to accept the minutes of the last meeting as a true record of what happened at that meeting and the decisions taken. The second motion that must be included in each AGM is a motion to consider getting an auditor. For those non-accountants in the room, an auditor is a type of accountant that checks the financial statements for the past 12 months to make sure that they meet the relevant accounting standard requirements. The third compulsory motion is the details of the insurance policy for the strata. As I mentioned before, strata arranges insurance, and you've got 3 compulsory insurances in a strata scheme. The first is public liability, and you have to have a minimum of $10 million. That's for anyone from the public, any owner or tradesperson that comes onto common property to protect them should there be an incident. The second compulsory insurance is the building sum insured. Now, the building sum insured is the cost to remove the building, architects and consultants fees required to rebuild it, and rebuilding it should there be a total loss insurance incident. And the third compulsory insurance is voluntary workers. This is a specific type of insurance that is different to public liability. However, it's insurance for specific items such as loss of a limb should there be an accident to one of the owners doing work on the common property. The fourth motion that must be considered at each AGM is a motion to consider additional insurance policies. A common additional insurance policy is office bearers insurance, which protects the strata committee from any decisions that they make on behalf of the strata scheme. The next motion that must be on every AGM is a motion to consider the annual fire safety statement. The annual fire safety statement is a statement that certifies that the fire measures in place at your building meet the relevant Australian standards and that the building is safe from a fire perspective. Now, that statement must be completed by a registered and accredited fire professional as required by law. The next motion is a motion to consider building defects. If your building is still under builder's warranty, your strata manager is required to put a motion on the agenda to consider building defects, and if the owners want to take any further action, such as following up or anything else to fix any unresolved building defects within your strata. A motion to accept the budget and to pass levies for all the owners on the strata. A motion whether to restrict the power of the strata committee, so you can put some specifics restrictions on the strata committee, such as they can't spend any more than $50,000 on one item without going back to a general meeting. An important motion, which is the next one, is a motion to elect the strata committee. Now, I'm going to talk about the strata committee and their role in a moment, but essentially the strata committee is a representative of the owners who make the day-to-day decisions for your strata scheme. And the final motion is a motion to prepare or review a 10-year Capital Works Fund program. We've spoken before about the Capital Works Fund. Each strata scheme in New South Wales is required to complete and prepare a plan for a 10-year Capital Works Fund plan, which plans out all the major expenditure or capital works for big items within your scheme, such as repainting, re-roofing, and those type of major works, whatever's going to happen over the next 10 years, and they're required to prepare a plan for that accordingly. Now, you can engage a professional company, and there are specialists that do this all day, every day, that can help your strata prepare this plan. As you can see, the annual general meeting is a really important meeting. It's a review of the last 12 months financially, as well as a decision to elect the strata committee from a governance perspective, as well as a budget for what's going to be done next year. It's the really important event in every strata scheme's year. So the easiest way to explain how the strata committee works and how they're elected is to show you. So I've got this sample strata scheme, Strata Plan 10102. And at the AGM, we have 8 people show up. So we've got 8 people show up at the AGM, and the motion to appoint the strata committee is conducted. During that motion, 4 people nominate to be on the strata committee. The owners all then agree to set the number for the strata committee at 4, and the 4 people are duly elected. What those 4 people's role is to work with the strata manager to make the day-to-day decisions around the strata scheme. So some examples of those decisions include choosing the cleaner, how often they clean, reporting and assisting with repairs, such as being a contact person, choosing the insurance company, working with the fire contractor to help them do their work to certify and sign off on the fire. So all those day-to-day decisions, the strata committee works closely with the strata manager. The strata committee have restrictions, however. The strata committee can't pass bylaws, they can't raise levies, they can't strike special levies, and they can't add to common property. But all the other day-to-day decisions, the strata committee can make. So if we look at the example of our strata scheme, Strata Plan 10102, they will have 2 key financial statements: the balance sheet and the income and expenditure statement. Now those financial statements should be read together. The first is the balance sheet. The balance sheet is assets minus liabilities equals equity. So if your strata, or in this case Strata Plan 10102, has assets, which is usually in strata cash, or liabilities of $1,000, which might be an unpaid invoice, your equity will be $25,000. So each year, as part of the financial statements, the strata manager will provide the balance sheet to the 30th of June. The income and expenditure statement shows the income that's received from the strata, which is through your strata levies, as well as any interest that might come through to the strata account. And the bottom part, the expenditure, is any expenses, the common property expenses that we spoke about before, things such as cleaning, insurance, maintenance contracts and repairs for your strata. So putting those 2 financial statements together, the balance sheet and the income expenditure, tells the full story. It's like when you open up your phone and look up your bank app, the balance sheet will show you how much money is in the account right now. However, the story about the money and how you got there is told through the income and expenditure statement. Thank you for joining us for this crash course into the world of strata. I hope to see you at the next AGM.
To find out more about the Strata Collective, visit thestratacollective.com.au.